good afternoon, everyone. Good afternoon. I'm going to talk a little bit about the market wrap. So the NQ got down to the daily two and bounced back to the bottom of its 5-minute opening range. And very interesting this morning, this level that it hit at 25,389.25. That was our 6-month 2 H fall. So the 68% 14 period range, um, measuring from the mean to the 1, 2, 3. If you take this as a holistic entire distribution, it would be 95% of the range. So it's an extremely significant level statistically, and the open is below the close, 25,389.25. So there's a potential to get up to that 25,415 for the close. And we are back on top of the 6-month one close and open. This is R ball. So these ones were one period. And you can see how long this one period held the market back before it broke out. And now we ran right into the 6-month 2 H fall, which is much stronger than an R ball level. So we are also very close to these, end of the year at the money lines for the Black-Scholes model for the ES. So we're very close to a top. Everybody knows that we're very close to a top. We're not on the top yet. There's 7,000 is the level for the high GEX. So you can pull up the quarterly level. You can see here the 7,060 is R3 for the 6-month 3, very strong level. But our 6-month 2s are a little bit higher than the NQ, 68.50, 68.44. But since the NQ is really controlling this market, that's, I think, what has some traders thinking that we're going to get that downturn the week of October 14th. So if we go back to my term structure, I wasn't expecting as much of a pullback as we saw today. Kind of took me a little bit by surprise because we had the down term structure today going through October 13th. So through Monday, and then it starts ramping up. So we have this huge jump from October 15th through the 16th of R vol over H vol. And that would be on expiration. So this implied volatility does not match the VIX. This is just IB. So you would need to go to the contract to look at these levels, but it would be, 67.82. These are very compressed levels here. But We're currently at 1101 and it would get up to, over 15. So it's going to be a big jump in volatility on the expiration next week. And then our term structure does rise. So that's normal. We're going to get that back and forth through the end of the month. But for the end of the quarterly period, the end of the year, we can come down over here to December 31st. Let me change this to my black shoals on the settlement. And you can see 68.50 is our at the money strike. And the gamma, this column right here, you can see the high gamma peaks at 7,000. So anywhere from 69.50 to 7,000, they will get you to the same high gamma, 89, 89, 89. As far as the dealer's concerned, they've already got it at 69.50, so we might not even get 7,000. But between 69.50, 7,000 for year end for the high gamma. And that's, they like to get the highest gamma possible. And then they move the market away from that high gamma. So that's the end game. And it just is a matter of how it will take us to get up there. 69.50 is our current quarterly ones. So quarterly one HFall, so that's the highest gamma. And that also is at our 90-day too. So if we break above these 6-month twos, HFalls, we're going to go right to the high gamma at 69.40 to 69.66, 55. And then you may see that spike pop and drop from 7,000 back down. But that is the long game. If we get there, we're not going to go straight up, right? So the market is trying to price in a pullback, and it looks like it's going to be next week from that term structure I was just showing you. So today got a little bit lower. Maybe the volatility, came all the way up to its 1717 for the 10-day structure, 9-day structure. The 10-day structure gets us, back down to the 1629 for the middle and 1650, between 1650 and 1629. And we can come over to the VIX on our quick options website, which I absolutely love. I don't think I could trade without it anymore. But the GEX is what is magical. And this is without selecting a time frame. This just gives you the overall profile. And you can see it looks like it is negative GEX, which is supportive overall. And when you click on a particular, expiration inside that overall framework, you can see 16 is the supported GEX, and then 17 is the positive high GEX, which we kept running into today. And we're right in the middle currently between the high low of the 16 and the 17. So for tomorrow, I'm thinking it's going to pin back at 16. 1629 is my 10-day VIX. So I can show you that right here. This was the 9-day. And when I change this to a 10-day, I think I've already done that. No. Yeah, I did here, right here. Sorry, good. Glad I did. All right. So here's my 10-day. I was ready for you. This fib goes to the close and this fib goes to the open. 1652 to 1670 is on the daily time frame, but when you move it down to a 30-minute, that's when we'll get to that 1629. So I can change this to a 60-minute time frame. This is a 10-day. Okay. I did change it. My apologies. So 1650. My 2-day daily GEX will get you back down to 1629. So we go from about 1629, 1630 to 1650 to 1660. So 1630, 50, 70. And this is see where we are, where we went right down to it, came back. So this will be our sweet spot between 29 and 70. We won't get back up to that 17, hopefully, maybe buzz it, but that's positive GEX. We want to stay in the negative GEX as possible. It got very scary today. There was a huge GEX on SPX. I don't know if that's already been taken off the platform. No, it's still showing. Hold on, I'll show it to you. So we were pinned here at this 67.20 for most of the day, and that's negative. That's huge negative GEX today. And I was so worried that it was going to get behind that, and because that's the dealer will be selling at that point. And it ended up 67.20 was our daily 3. See, it pinned at 67.20 right on our daily 3. And I was worried that they were going to sell that if it got below it. And so it sat there all day, all morning from noon to really 2 o'clock. 2 hours sat on that little 67.20 pin and finally released it. Some vol crushers came in and took us down from the 17, which was my upper level, back down to the mean. So thankfully they came in to reverse it to the mean again. And even when they reversed it to the mean, it still sat on that 17.20 and did not move. That kind of had me freaking out because I thought, they dropped the VIX so low, it's going to pop up just a little bit and that would send the SPX down. But they threaded the needle and just kept applying the vol crushing, which is good. The vol crushers did great today. So we need to get the market into a little bit of a pullback, and I guess this is a controlled pullback regime that we might be in, especially next week. That OPEX, that expiration to OPEX, you saw the term structure spike on quick strike options. Those are your futures for ES and Q gold, crypto options on futures. And that term structure is really really powerful because the dealers and everything will plan around that gamma and IV and open interest for the futures. The quick options is for the SPX and VIX as well as your stocks. So we could look at NVIDIA or anything that comes up for earnings. We can start pulling those up and looking at the open interest and volume and GEX as well as the Jats PT level. Hopefully soon the CME is going to give us the options on single stock futures so that I can get NinjaTrader to give me the stock stocks data stream, and then we would have an ability to show you all the live data. I can get 5-minute delayed data now through my partnership, but I'd rather have live data to look at instead of delayed. It's all about the data, you know. It's not cheap, especially when you're running algos. Let me tell you how expensive it is. But it's so worth it. And especially if you have good data like with Quick Strike and Quick Options, makes all the difference in the world. So for Bitcoin, sold off a little bit today, got a little bit below its daily one, came right into its monthly one again, tested it again, and then ended up back above that monthly one line of the body. So we just came back in for another flush for some reason. But the dealer's already moved the risk out. So this level right here should be very strong. That is right here, 121,500, 121,385, just very strong levels, you would think. So it just shook out some weak hands here and get it going back up soon, real soon to the upside. It has plenty of room to the upside to go. We just had a pullback day, I think, overall. Gold pulled back at 1.25 times its daily range to the tick. You know, this morning I thought for sure it was just going to all be inside days, sleepy days, and market surprised me. We came right back down to the weekly ones. Same principle as that monthly Bitcoin. Once the dealer moves the risk out, they don't want it to go back inside. These are pinned, the risk. So it bounced when it got back down to the weekly one. So it should be closing above this 3960 for the week for tomorrow. Close back above it. Not necessarily that's going to take off again, but I think everybody was freaked out over that 4,000 for some reason. And I can tell you that gold had took a long time to even get a new high. Crude sold off at its daily one and did break its lower daily one and came down to the R-ball one. Or excuse me, pardon me, R-ball 1.25 at the daily two H-fall. So these, realized volatility ranges, 1 period and 14 period, are very informative. 1 period meaning my statistical levels on the current volatility versus a 14 period volatility, 14 days. And when you find a confluence of the levels, like right there, it makes a stronger level. And the position of the R vol to the H vol is very informative also. You see this R vol was inside the H fall, but it was outside just a little bit on top, and the market broke to the downside. It was a little bit confusing today. I thought that we would stay inside, to tell you the truth, this morning. But anytime you stay inside the daily two, that is the expected range. So the daily two to daily two range um, was the dealer expected range 68% of that statistical distribution from the mean to the 1, 2, 3, 95% when you go on both sides. And, 90, so you go from 95 to 100%, 99 point, whatever it is, 997, 99.7 on top. But I like to measure from mean to 1, 2, 3 that way. Then I can go 34, 68, 95. The empirical rule. All right, so that's about it. We will hope you have a good night. We'll see you tomorrow. Not expecting like anything dramatic to happen again tomorrow. We see the boundaries pretty clear um, for the VIX, controlling things between 16 and 17 again tomorrow, 1650 being the middle. And so nothing really expected to change with that until next week. And then we'll get a little spike up for that OPEX expiration and see where we go from there. Talk to y'all later. Have a good night. Let me know if you have any questions. And I appreciate you. Thank you. Talk to you later.